Hello, welcome to a series of video that I will focus on the gap to try to illustrate how a gap works and how a gap fill works later. For this video, the first one of the series, let's focus on gap up. And I'm just having Fortinet up because it's the most recent stock that I have been involved in, as well as gap up and gap down. But I'm sure if you follow the market long enough and buy individual stocks long enough, you have seen many gap up and gap down. And hopefully this video will help you trade or invest better. When it comes down to trading, a lot of people don't have time to trade. Certainly, understanding TA is still very useful for long-term investing. Ignoring TA and just blindly buying in or dollar cost average is really not the smart thing to do. I understand for those that don't have time, too busy with work and family, I get that. But for those that have time, a little effort can yield substantial alpha to your return. Okay. All right. So let's talk about gap up. But first, what causes a stock to gap up or gap down? And this applies to both gap up and gap down. I usually get this question occasionally on a stock that gap up or gap down. Nick, what happened? What's going on? There are usually three key factors that can create a gap up or gap down. One is geopolitical. Another one would be sector specific. And then the third is the company specific. So whenever you have a situation where a stock that you own either gap up or gap down, take a look at those three factors. Is it company specific? For example, Fortinet, did they gap up because of positive earning? Most likely, right? Because this happened on earning announcement back in February. I'm sure they come out with strong earning and guide higher. So boom. So it can be company specific. It can be sector specific. For example, what if there's a new cyber threats out there that focus everyone to try to buy security, cyber security. Okay, so that would cause the entire sector to go up. And sometimes you can go with company specific, but in sympathy with another company. So in Fortinet field, you have CrowdStrike, you have Palo Alto, and sometimes good news or bad news on those specific stock can also create the downdraft or the updraft, and that's that's kind of like in the middle of what I would call company specific and sector specific. Okay, so give or take how you want to slice that. But then you can have geopolitical. Sometimes a big gap up or gap down can be something that has nothing to do with the sector. It has to do with the entire market because of some big political or economic event, right? So keep in mind whenever you have a gap up or gap down, try to peel the layer of the onions on what can cause it instead of like a knee-jerk reaction and just think it's company specific. There are multiple other factors that can cause the gap up. All right. So let's get that out of the way. The psychology of the gap up. When you have a gap up, once again, there are also multiple scenarios that can happen. You can have a gap up and slide. That's the worst gap up, when you have like a situation where you have a stock that have a big gap up and then all it does is drift down That's the last kind of gap up you want, because basically there was no incremental buyers that jump in. Okay, when it comes down to the sentiment of a stock going up or going down, it's about incremental buyers or incremental sellers, right? So when you have a gap up and then drift down, that means that there is no incremental buyers that jump in and pile on and FOMO into driving it higher. In this situation, you have a gap up, and it's not abnormal to have some consolidation. Sometimes it can be sideways. Sometimes it's a little bit down and up. Okay, or sometimes it's a gap and go. Those are the ones that we all love to see. By gap and go, that means that it gap up, and then all you see is upward trajectory. Okay, those are the kind of gap up we all want to see. But a lot of time it's gap, drift, gap, consolidate, and then keep going. But what happened is the psychological game that happened, as illustrated here, is, a lot of time when you gap up, a lot of people focus on this low here, the low of the gap up day, right? A lot of people focus on that because psychologically people will say, well, if the people that hold the stock here or bought it down here, certainly they don't want to give up too much. So if a stock go below the low of day on that gap up day, some people might say, get me out. This look like a gap up and then drift down, right? So it can happen. It could be a fake out, right? So that can happen. But in this situation, it did that for 2 days and then it went up. So does this negate the low of day here? Kind of, in my opinion. Now, I'm sure some people out there would disagree with what I say, but this is when this point right here, the low of day, turned into a zone. For those that follow me long enough, I talk about the zone. Okay, once you have this kind of situation, then it's no longer just a level. It's a zone where the support is. So as you can see, the next 2 or 3 weeks, it came down and test the zone. Okay, so let's for this video, let's do this. Let's add the drawing. Okay, and then let's extend that. As far as we could. Doesn't matter where. Okay. So on the situation when you see here in February 24 and in March, early March, what happened is this is where buyers that miss out on this start to come in. All right, that's the psychology of a gap up buyers. For those that miss out on this and watch it go up higher, some of them will come in and nibble or buy into the position because they missed out here. Okay, there's a fear of missing out that came in right here. That's the psychology of the gap up support, right? That's why a gap up and go, or gap up and go sideways and consolidate, have support, because eventually you're gonna have some people that miss out on holding it before the gap up coming in because they miss out, right? So you have the support zone here where multiple times it came in and support the stock. So that's how the gap up low of day turn into a zone and turn into a zone of buy support. Hopefully everything I said in the last 10 minutes makes sense, right? And maybe I will come back and do another video on the gap down, on the psychology of the gap down. But I think even without me doing it, you can flip the narrative on the gap down and you can understand why the gap down have a level of resistance, a zone of resistance. Thank you for watching. Bye-bye.